So let us start. Obviously, the time frame is going to be M5, and the day and the date will be in the top left. So we've already covered a couple simplicity approaches in week 2, so you should all be very aware of the first step, which is build up. Exactly. So obviously your first step should always be to identify the build up. If you can't identify the build up, then wait until you can. You're very likely going to be liquidity if you can't identify the liquidity, and it allows you to focus on your clean setups. So let's jump in. The build-ups. So obviously we have our first channel right here. This is in Asia, so we wouldn't really be looking to trade it, but it's good to understand. So obviously that's the next step. Boom, boom. And then coming down, we form another channel, breakout of Asia low. So where would the stop losses be? Likely here and also here. This is always a good question to ask yourself. Helps you sort of stay on the right path. Then again, building our equal highs, induce one more time to the downside within a specific timing. I'm sure you guys will be aware of that one right now. And then we have a classic. Boom. We shoot to the other side instantly, take out all of this build up, take out the SLs, and what do we do this within? London Open timing. What are all of these vector candles? The entire world is going to be tricked into selling right here, into buying right here. Where are their stop losses? Boom. Right. Then again, we go into another little build up, into a little inducement high plus mitigation, something within there, crash down. Then again, we've taken out these. What are these? Vector candles, but you know, it's not within timing, so we can stay away if we please. And then again, our next build up channel, boom, inducement high, mitigate. And then again, we go into another build up into inducement lower, and then we create these equal highs right here, fake the reaction. Oh, it's holding, it's holding, it's holding. It holds until it doesn't, likely mitigate something in the M1, and then we trade away again. We go into another build up, vector candles down, build up, vector candles, push away. So that's a very brief overview of the day. So let's go step by step now. So these are our build ups. What is next? The next point is the inducement. So it's going to be, ideally, it will do two things. Like we said, let's say you've got these equal highs right here. What do we know? Well, sellers are going to be in these equal highs as, you know, stop loss at a fixed point. Price vectors through, takes out these sellers, brings in buyers. Where are their buyers going to be? Where are their SLs going to be? Likely here. Takes them out. Boom. That is the ideal. And obviously for our inducements, we don't want to see some little pissy little slow inducement like this. We want to see something like this, where it just vectors right through, lots of momentum, convinces everyone, yeah, we're going up, everyone's getting excited for the buys, getting buys. Boom, we bring them all in, we take out the sellers, and then we are reversing. See you later. So let's mark up our inducements. Again, you wouldn't really be trading this, but in Asia, there's our channel, vectors, inducement number 1. So we induce high to go what? Well, to go low, and then again we induce high again to continue lower. This would also be an inducement, takes us higher. Again, this inducement is in no significant timing, so you don't really want to focus on it too much. And the majority of the time when you see an inducement like this, where it's just after Asia, and it's just like induced Asia high within like Asia high or low within like no specific timing, I don't want to guarantee you, but like the majority of the time it'll actually come back and get induced again. So there we go. This is our inducement within what timing? I won't give it away now, but you guys can think about that. Look at this, vector candles right through. At one point, this candle would have been completely black, so completely solid. That would have been a lot of selling, quote unquote, selling pressure, how everyone would have seen it. Also, you've got to think structurally, we're making lower highs and lower lows, so people love to follow the trend. Oh, it's not going to fail, it's not going to fail. Yeah, we know all of that stuff. And then also look at this, you've got an overarching build up right here. So then after we have our inducement low within that specific timing, we straight away vector up. Boom, 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 boom. We're in London Open. Okay, we know that we want to, that ideally, especially with this kind of price action, we're wanting to look for some kind of inducement of something specific. So we get the inducement of Asia high. We have the Asia low breakout here, so everyone's SLs are up here or here, depending on how they trade. Then we vectored through. Okay, this is telling us something. These vectors, everyone's going to be looking for buys, especially once we break structure. You've got your breakout traders getting in SL down here. So then within London Open, we get our inducement. We don't want to be guessing where the inducement is, where the inducement ends, sorry. So next up, we trade away. If you want your internal BOS, there it is. So your internal BOS come back into this build up, induce the build up high, not the cleanest, I agree, but still an inducement into this mitigation. Then, like we said, continuing down, what do we love to see with our inducements? We love to see vector candles, vectors. All of this induces this. Personally, this is one of my favorite entries. You'll see it a lot on the edge. Yeah, so let's keep going. Like we showed, this build up into this high. We also have this mitigation zone on the left. So you do need to be a little bit careful if you were to trade like this mitigation, especially when we've induced something significant to the left. You would need to be a bit more like, what's the word, conservative with your TP, because possibly this inducement here has not completed its purpose, and maybe price needs to come up and induce this. So if you're getting into a sell like this, unless this is a really clear trap, so like let's say like, oh, it induced like the previous day high, previous week high, or like some significant liquidity mitigated, so you've got cycle complete in London Open, then you can probably trade away from that for the rest of the day. But because I can't see, what you want to be careful of is that this inducement may not have completed its purpose. So if you're getting into sells from here, you're going to at least want to partial at like these mitigation zones. Sorry, that was a little bit of a tangent. Yeah, and then obviously we have the inducement high into the mitigation. Perfect. What are these? Vector candles. Love to see it. So the vector candles plus the completed cycle gives us room to go what? To go higher. Unfortunately, you're not able to see it, but this is actually London close, I'm pretty sure. So we get our London close mitigation. We build these equal highs. That is very nice. Equal highs, fake reaction to show the liquidity. People getting excited, especially because they think, oh yeah, we're selling from here, structures to the downside, we're going to sell, we're going to sell, we're going to sell. Then what do? We come up, take out the equal highs, mitigate and go lower, and now you're sort of getting into like end of day consolidation. So your best, if you are in like this sell up here, your best point would be to take it out right here. All right, so that is that step. Let's go on to the next one. Who remembers what it is? I'll give you a couple moments to think. It's the only quote unquote optional step, and that is, of course, the break of structure. Personally, it's not something that I use, but it can be a very nice confluence after your inducement, especially if you're wanting to play it safe, because if you're not comfortable with inducements, you can get something like this, where you see this and you think, oh yeah, of course it's induced, and now I'm going to get into a sell, and it's just like a little pullback, and then we continue even higher, and you end up getting in like all of these little pullbacks, just taking L after L after L, which is not ideal. So let's see where the break of structures are on this one. So to start off with, we obviously have the Asia one, where we've got our Asia cycle to the top side. I can't remember if there's a mitigation to the left, to be honest. It was a couple of months ago. But there is your break of structure. Potential mitigation if you want to trade Asia, continue to the downside. Then afterwards, we've obviously got our inducement to the downside. Within timing, we come up this break of structure. So ideally, price would have done something like boom, boom, and then go higher. That would have been like your ideal scenario. Then obviously we induce Asia high within London Open with vector candles, and this is the low that caused the push. So that's your break of structure. That's your mitigation. Where to? To here. Now, why would we not look for a mitigation right here? Because we've induced something significant during timing. So you need to be very careful right there. All right. And then again, inducement to the downside, lots of vector candles. And then here we go build up. And now this gets interesting because it's different from up here. Sorry, it's different from this one right here. Here, we don't have build up within like something like this. This build up gets induced to the upside, and we're trading away from this significant inducement. Again, remember, this is likely our most significant inducement of the day because it's London Open, lots of vector candles. This could potentially, well, this obviously ended up being high of the day. But at this point here, you should be thinking like, okay, this could potentially be high of the day. And then we get into New York trap time. So pre-New York trap, we leave this high right here. We go into a build up. We leave this high right here, and then we vector through. Especially on M1, I guarantee if you go and look at this on M1, this will look very clean. And then you've got your mitigation. So this is cycle, so main inducement of the day, London Open. Then you've got cycle complete in New York trap time. So you know that this will give you a pretty good reaction. If you're not comfortable with taking that, you can maybe take this mitigation. Again, can't go and see what's on the M1. But yeah, again, like I said earlier, you need to be a little bit conservative in this case. It depends on a couple things. Depends how much liquidity this has taken here. But yeah, if you've had like an inducement that hasn't really induced, so like this inducement here, it hasn't gone and induced anything significant high. So I'd be like a little bit wary of trading against it, if that makes sense. So that means like trading, like if you're selling, you need to be like a little bit wary. Same with like this right here. Like if you're buying this, you're definitely not going to target this up here, especially when you have cycle complete in New York trap. Once you see something like this, it should definitely be off. Yep. So then again, we come down. This was the push. So yeah, break of structure into mitigation of the inducement, push down. Okay, now we've induced low. What do we do? Build equal highs, give sharp reaction. So everyone's like, oh my God, it's going to hold. This is the equal highs. If you're a smart money trader, that's where you're selling from. So then let's look at this. Cycle high, break of structure. mitigation of the inducement, but again, this is quite late. You'd probably just target like something like this, and the RR isn't really too worth it, at least on M5. Maybe you can refine on M1, but that's not what we're really interested in. We're more just looking for understanding of each of the moves. So let's go on to the next one, which is of course mitigation. And this is how we'll be getting our entries most of the time, unless you're taking a straight inducement trade, but we wouldn't recommend that while you're still learning. So mitigation, it fills price inefficiencies. That's the imbalances. Remember, you should know this by now, but you need 3 candles for an imbalance. Draw like that. Okay, so just think about where the imbalance is, and then I'll draw it in a second. All right, so the imbalance would be this right here. Okay, and obviously if price comes back to this point here, that imbalance has been completely filled. Comes back to a supply and demand area, that'll likely be like this candle, or like if you've got a bullish candle, maybe something like this. Boom, boom. Then your demand zone would be like that. Your supply zone would be like that, sorry. Provides you with a point of interest. So let's look at our mitigations. Oh, let's take all that stuff off the screen. Okay, so yeah, we have inducement high. So obviously we have inducement low, break of structure. Ideal play would be it comes back to here, and then again inducement high, no break of structure. So you know, this one's a bit more risky. Again, it's in Asia, it's not really something we're gonna touch. And then we have inducement low, break of structure. So again, like I showed, the ideal play would have been something like that. And then we get into this one here. So inducement high, break of structure, mitigation. Yep, you take that to at least here, not bad. And then again, when we have inducement, so this mitigation zone, you need to be careful with. If we don't have a cycle coming up into it, like if this is just going like this, then this will probably become a smart money trap and it won't get played. But look at what we do, right? We have build up, leave this high, then New York trap time comes, vector up into the SMT, into the mitigation. Then we have our break of structure. So this is maybe like the riskier trade. Then you've got your relevant break of structure, and then again another mitigation right here before it just goes. Okay, and then again, like we spoke about, sorry, inducement high, likely mitigate something over here, created these equal lows. This is our build up, inducement, mitigation, break of structure, mitigation again. Yep, you see how it's the same thing over and over and over again. And then again, we're getting towards that end of day consolidation. All right, perfect. So now I believe we're actually going to be getting into not something new, like you've already learned it, but the next stages of the simplicity approach, because obviously what we taught you was not the complete simplicity approach. So next up is SMTs, smart money traps. We need to think just logically. Let us think for a moment about why would a smart money trap be a smart money trap? Well, likely if you're taking a mitigation zone against like an inducement, that's probably going to be a smart money trap. If it lies on liquidity, that's likely going to be a smart money trap. So yeah, let's jump right in and let's try and understand why these are smart money traps. Okay, so first up we have our build up inducement. So we've got our build up and inducement. So why is this one not valid? Like this is our, you know, this POI comes from an inducement POI. It looks nice. Well, it lies on Asia high, right? So you don't really at all want to be setting your limits at Asia high. Can they play? Of course. The same way that 3 taps of a trend line can play, but is it something that you want to continue to do in the long run? Probably not. So that makes a lot of sense. And now here you could be like, oh, well, this is our quote unquote main break of structure. So why would you not play this mitigation or this mitigation? Well, again, very same reason. Again, you probably don't want to be using structure like this, but if you are, for whatever reason, it's exactly the same reason. We've induced high within London Open, so this is a timing based inducement, so it's going to be, you know, quite confirmed that we are going to trade away from this. With vector candles, like, you know, your inducement could not be more clearer than this one. So this is definitely something that if you ever see, you just go, no, I'm not going to take this buy or this buy here. So we can understand why this one is a smart money trap, and we understand why this one is a smart money trap. So next up, we have this one. Why is this one a smart money trap? Well, we've had an inducement low. Coming into this, we have not had a significant build up. We're actually in the process of building up. So if you can't identify the build up, what should you do? You should stay out. So you should never be taking something like this if you can't identify the build up. So that's why this becomes a smart money trap. This one would have been exactly the same if we didn't have the build up before it, unless of course, you know, we've induced something very significant over here and we're trading away from it. Then it's a little bit different, and this just provides the pullback. But yeah, that's why this is a smart money trap. And then last but not least, this one should be pretty simple. It's at the end of the day anyway, so we know that at end of day there's going to be a lot of consolidation, and we're not going to be trading anyway. But also we've had an inducement high, so yeah, this is likely going to be smoked. Okay, perfect. What's next? Well, you know, I've been hinting it a little bit, and I'm sure you guys have all learned it by now, and you're familiar with the timings. So before I go into it, let's actually just eyeball it a little bit, and like, where do you think the timings are? And I'll sort of go over it. I'll give you a couple seconds. All right, so just eyeballing it, this is likely going to be our Frankfurt. This one, London Open. This one is a minor inducement at MM1. And then this one is probably MMM2. And then obviously New York Trap, and then London Close. You'll eventually get to the point where you can just kind of eyeball them, just sort of understand, because obviously UTC +2, Frankfurt is 8, London Open is 9, MM1 is 10:30, MM2 is 12:30, New York Open is 2 p.m, New York Trap is 3 p.m, and then London Close is 5 p.m. That is all UTC +2. So let's have a little look. Timing. So obviously this is going to validate some POIs and validate inducements, stuff like this. So it's exactly like we said, right? We can sort of see, oh, sorry, I've sort of blocked it. That's not very good of me. But we can see Frankfurt, London Open, MM1 to the minute, MM2 likely to the minute, New York Close, that's not to the minute, that's all right. And then London Close, I don't think that one is to the minute either. I think maybe that's a couple of minutes afterwards. But we can see how these inducements really give us like weight. The timings really help with the inducements, because look, we've induced low here. It's at MM1. But here we know, okay, this is our London Open inducement with lots of vectors. Yes, we can expect a pullback, but we know it's probably not going to take this high. So if you do want to take this buy, you get out here. And then Frankfurt, again, vector candles. But after we've had this London Open inducement, okay, we know this Frankfurt low is probably going to get taken. And then again, MM2, lots of vector candles. Notice how the vector candles basically line up with your timing, because that's normally when your inducements come, right? There, your true inducements come within the timing, so it makes sense that you see the vector candles within the timing as well. And then obviously New York trap again, and then London close. Yes, it is an inducement, but more importantly, we mitigate something. Okay, that all made sense. So what do you think is the next step? We have had build up, inducement, relevant market structure / break of structure, mitigation, smart money traps, timing. What is the only thing that we have left out? Exactly, entry helper. So I'm going to have to sort of go back and forth, but let's show you a couple things. So right here, where we have our mitigation, it was also an M1 let. I'm only going to show you because the entry helper should only be used at the last point to validate certain things, right? You shouldn't just be blindly like, let's try and find an example. Like, you shouldn't just be blindly taking like random M5 lets. No, it's an additional confluence. It's not the reason. Okay, so again, this would be very nice. Your mitigation combined with M1 let. Maybe you wait a bit, market execute, stop above the high, something like that. And then also the zone right here was an M1 EDM, so this would give more validation to this mitigation zone right here. So if I just go back onto here, we basically had M1 let here and M1 EDM here. So you can see when using it in combination with everything else at the end, that's the important part, at the end, it can give you some really, really nice like additional confluences. And that's how you should be using it. I don't want to see anyone using the entry helper as their main confluence or using it just randomly. That's not how we use the entry helper. Okay, perfect. So that is the first one. There you go. Let us look at another one. So EJ on the 25th of May. Let's go through it. 2022, obviously. The other one was also 2022. So what is our first step? Well, as always, our first step is going to be identify the build up. So it's always going to be your first step. Like we said, if you can't identify the build up, then just stay away. So there's a little bit more build ups on these. They're all quite nice, as we can see. Lovely little build up inducement. Again, these are in Asia, so you don't really want to be trading them, but for understanding, it's obviously good for us to mark it all up. Inducement low, boom, inducement high. Then we go into our channel. We induce the channel low, induce the channel high, boom. Also, what is this little line right here? The midline. So that's another additional confluence. And then again, probably wouldn't draw that like this, would more draw it like this with your equal lows. Inducement low, inducement high into a build up of a channel, boom, induce the channel low, and then again another little build up into inducement high, creating, even though this did like induce this on the left, likely just creating liquidity for the next day. Okay, perfect. what is next? We've had our build-ups. What do we need to identify? Exactly, our inducements. Again, we've already been through this, but vectors. These are so important. You do not want to be taking inducement trades where it induces like this. So like, let's say we got like a double top here. Boom. Like this. You don't want a slow inducement. Rather, you want, and then boom. Everyone's got FOMO. And not necessarily just FOMO, but people use momentum as a confluence in and of itself. So you also have, this is a confluence for people. It's not just inducing FOMO, but it's an actual confluence for people. So people see this as momentum's on my side. Okay, market execute, SL below there, let's get it. All right, so the inducements, all of these should make sense. So like we said, build up into inducement high, build up into inducement low, build up into inducement high. Again, here we can see why, especially at the beginning, you want to be waiting for your additional confluences. You don't just want to be selling just because we've induced some point, right? You want to, you know, really build confluences. You don't just want to be taking random things. Okay, so there you go, inducement high. Again, inducement low to pull back, to take out the what? Asia midline. So this is a strong liquidity area in London Open, lots of vector candles. You see how it's all coming together? And then again, we push down, create equal lows, induce low to induce high so that we can continue the move. Yeah. Then, okay, at this point, okay, the move, we've had another channel, significant channel into an inducement to the downside. Let us get another inducement to the downside. And now we have our build up into the final move of the day, inducing high at what time? I'll leave that one for you guys. I won't give it away just yet. All right, again, the optional point, is it the only optional step? Because it can happen quite late, but let's get into it. So inducement high, break of structure, potential mitigation, and then again, inducement low. But here, look, where would your break of structure point be? Right here. But by that point, we've actually induced something significant to the high side with vector candles. So you know, okay, realistically, we don't want to be taking a buy from here or something like that, right? Then we have the break of structure after the inducement high. This would have been your ideal mitigation if you were to trade Asia. And then, yeah, so channel, what's this? Vector candles. Okay, perfect. So then again, London Open, like I said, Asia midline gives this, that was awful, sorry. Asia midline gives this additional confluence for this inducement, and then this be your break of structure point. I'm sure some of you can see why we don't normally, why I personally don't wait for the break of structure, because it means that I get stuff like this where I've missed the trade, and by the time it comes back, this is an SMT. So again, induce high, not a break of structure, just an inducement high, vector. Now we have our break of structure as it goes into its channel, potential mitigation, into boom, inducement low, and now this becomes a break of structure, and we're trading away from this key inducement. look at, so this is a very good example. Look at the difference between this and this. What do you notice? The vector candles, right? How much it tricks people. That's a very good telltale sign of inducements, especially like strong ones. They'll have really nice vector candles like that. Okay, inducement. Ideal mitigation would have been here. Maybe we have something on the entry helper that allows us to get into this right here. And then we see channel into inducement high to end the day with a London close trade. Maybe there's something on M1 right here. You take it down to here. Don't really know if that'd be worth it, but just for understanding's sake, we can see. So what is next? We've had liquidity buildups, inducements, break of structures. What actually allows us to get into the trade? Well, that is the mitigations. So it fills price inefficiencies. That's obviously our imbalances. Again, you need 3 candles for that. Comes back to a supply or demand zone. So obviously a supply zone would be like your last buy candle before the sell off, and your demand would be the opposite. And then obviously provides you with a point of interest. All right. So these are our potential mitigations. After our break of structure, like I said, we have this mitigation, but again, this is Asia. Wow, that is awful. This is Asia, not really something you'd want to trade, but we can begin to understand. And then again, we get order flow away from this inducement, but this order flow also acts as liquidity to be taken later on. Don't want to get too much into that, but yeah. And then again, inducement high into a break of structure. This would have been like our ideal mitigation, but doesn't come back. And then again, inducement low, potential mitigation. This isn't really something that I'd recommend to take. And then again, inducement high into your potential mitigation would have been really nice from here, but again, you don't see anything. And by the time that you've induced low, what does this become? Begins with an S. And then again, inducement low into your mitigation, but you know, okay, this isn't really a very significant one. This is just going to provide a quick pullback, not really too much reason to get in there. But with this one, it's definitely nice because look, you've got your inducement high right there, taking out this build up with vector candles. Then we have our break of structure to the downside, mitigation target would likely be this. Why this? Well, this is your channel. Then this would be your breakout of your channel. So you have 2 options here. You could either just like at this point here, set your target to this, or maybe you've got something on the left over here, you set your target to that, or you just watch and you see like, oh, we're having vector candles out of my channel. I should at least partial here. Okay. And then again, we are trading away from this inducement, build up into inducement high, into mitigation for what? What would this be? Where would you aim? Probably here, grab your 1 to 4 to end the day. Not too bad, can't complain about a quick 1 to 4 at the end of the day. All right, so we've had build up, inducement, break of structure, mitigation. What is next? I gave you a little clue. It begins with S. Smart money traps. So again, let's not just label them as smart money traps, but let's go over the reasons why they would be smart money traps. All right. Well, this first one should be pretty obvious. Sorry, excuse me. Should be pretty obvious. It lies on Asia low plus all of this liquidity, you know, order flow liquidity, loads of smart money traders getting in here. So yeah, we know there are going to be SLs here, so this should definitely get taken. Again, why this one? Well, we induced high, midline, vector candles, London Open. So now we expect this here to be taken out. So that's your smart money trap, not this, but actually this. Okay, perfect. And then again, let's go over it. My bad, this actually missed. Okay, I thought we'd actually get tagged in there, but that missed. So now we've had inducement low. So what do we expect? Well, we expect inducement, vector candles, New York Open. New York Open, vector candles, inducement. Well, we expect to take liquidity to the top side. So this is just going to be a smart money trap. Also think about it like this. Oh yeah, lower high, lower low, lower high, lower low, lower high, lower low. Oh yeah, it continues, it continues. Of course, trend is our friend. Yeah, and then obviously we have build up into inducement high. Why is this a smart money trap? Well, again, we've had inducement low. We could potentially have looked for a mitigation within this, but you'd need to wait for confluences. You'd want like, let me just draw it out. You'd want like some entry helper confluences within this, like a let or something like that. It's always best to wait for your London close mitigation though. You can see how this happens like dead on. This is always best. So you wait for inducement, price trades away. We see, okay, it's London close. Price comes back, it mitigates. You get a bit of shaky hands because it almost stops you out. And then you TP here. Perfect. What's next? Well, that's our SMT. So next up is our timings. Now, can we remember our timings off by heart? Should be able to by now. So what is Frankfurt? Well, that is going to be, that's UK time. Let me delete that. So Frankfurt is obviously 8 a.m. to 9 a.m. This is all UTC +2. London Open, 9 a.m. to 10:30 a.m. Again, you see how like this isn't really all that significant. New York Open, like we said, look at the vector candles. Lovely, love to see that. New York trap right here, and then London close. So New York Open is 2 to 3, and then New York trap is 3 to 4. And then this one right here is obviously London close, which is 5 p.m. Okay, again, we can see that all of our nicest inducements align up with timing. The vector candles align up with timing. Potentially you get a bit confused here, right? Because this looks quite nice, vectors, vectors, vectors. Maybe you take this, you end up with a loss. Not something that I personally take, but if maybe at the beginning it is something that you take, or you think like, oh yeah, this looks quite nice. But again, this isn't something that I would take, and we'll go into that later on. All right, so next up, we've obviously got the entry helper. So again, we're going to sort of flick backwards and forwards here so that we can sort of show you what's going on, right? So again, we don't want to be using the lets like this because, you know, it's not after our lit cycle. We've got nothing really going on. We're not too interested. Sure, a move ends up happening, but I wouldn't use the let like this. But look at this, right? We have build up, inducement. Okay, now it's looking good because we've had our build up. We're trading away from our inducement. We get an M5 let, right here, a perfect one. Then these are some very nice trades you can take, boom, away from the inducement. And then after that, we're still trading away from the inducement. We haven't induced anything to the high side yet. Then we get our M1 EDMs, boom, like this and like this. Trade that up to here. Personally, probably wouldn't take these EDMs, but this one right here, oh, that would be a very, very nice trade. So let's just look at where they would be. So as you can see, the first one would be right here. Very nice entry. You know, you take it to these highs. Very nice. Maybe you partial here, get a little bit worried. That's fine. You can build your psychology, and then you've also got your EDMs around here. The only thing I would say is, looking at this was the actual inducement, so maybe you expect a bit of a bigger retracement, but if the EDMs happened like so, let me show you, like this, so let's say we just built equal highs and then we came down and gave the EDM, yeah, that would be perfect. That is basically the ideal way to trade EDMs and lets. You want like your trap / inducement to form, so that's where everyone's been trapped. This comes down, ideally you've got your mitigation. That is also a let. Yeah, that is also a let. That would be ideal. And then from that point you would have like boom boom, and then maybe that is like an EDM, and that's like the ideal way. So potentially you get in on the inducement, the mitigation of the inducement, which is also a let, and then the EDM continuation trade. All right, so these are the new examples. Next up, I think it'd be good if we covered some of the old examples, you know, the simplicity approaches that we did in week 2, but we actually complete them this time.